Hey, it's Clay Trader, and this will be a video chart on SPY, which is the spiders for the S&P 500. And pretty much what that is, it just allows you to play the market. If you want to play the S&P 500, you can get in and buy shares of this, and it mimics the S&P 500. It's not leveraged or anything, so it's tick for tick, and it's just a good way for traders to be able to take part in playing the overall S&P 500 if they so choose. And on that same note, it mimics the S&P 500 chart. So this is just another way to go over the S&P 500 is just to use ticker symbol SPY. So with that being said, I'm going to go over a few different time period charts and kind of just go over what I'm seeing. Unless you've been living in a cave or a box or something, you know that over the past 2.5 months or so, the market has been in a steady uptrend. And this is easy to see on the 30-minute chart here, as you can up here 30-minute. But this orange line is the 200-day simple moving average, and even if I extend this out even more, you can see that we've just been in a very solid uptrend. And for any people that are unfamiliar with charting, when I say this is a 30-minute chart, what I mean is each one of these bars, or their real name candlesticks, represents 30 minutes worth of price action. So here's 30 minutes worth of price action, here's 30 minutes, here's 30 minutes, and so forth. So when I say a 60-minute or a day, just know that each one of those bars or candlesticks represents that time period. So getting back to the 30-minute interval, the key level that I'm seeing right now that we keep kind of flirting with and hovering around is this area right here. We have this previous gap, and as you can see, the price has come down and a few different times has flirted with the area. Support resistance levels are not specific price levels but more of zones. So here you can see it came down, was hovering. Here it actually hit the zone, and from there bounced back up, came back down, and once again hit that zone. So on the 30-minute chart, this, just to make it easy for argument's sake, $88 is the level that you're going to want to watch, as it has been a common support level. And one thing to note here is we had a high up here, and on this last move the high was here, so we did not quite get as high as our previous move. So that is one thing to note also. Now bumping up to the 60-minute chart, the same thing presents itself. Here you can see we had this little gap area, and once again flirted with it, actually hit it, and then actually hit it. And we're sitting right above the 200 day, or excuse me, not day, this would be 200 period simple moving average. And once again, it just shows how nice of an uptrend we've been in for the past couple months. This area is getting pretty critical because we are nearing this 200 day, or excuse me, I keep saying that, 200 period simple moving average. We actually got a bounce off it. End of the day today was a nice rally, and it really bounced up hard. So once again came down and tested this area, held strong, and is now bouncing. So we'll see what happens here. And once again, keep in mind these highs. Here was our previous high. On this bounce, we came up but could not quite put in a higher high that was above that. Now getting to more of the frames that swing traders and so forth use, here is the daily chart. And once again, this level that I drew on the 30-minute chart still holds true for the levels that we want to watch. So that's just another little charting tidbit. You can see that key price levels translate to all different time periods. And once again, we are talking about this approximate $88 region. You can see that the high of this candle right here was 87.95. High of this one was 87.74. High of that was 87.65. High of these ones was all right around 88. So the point being, this $88 level is really key. And as you can see here, so let me shrink this up a little bit more so we can focus in. When we broke above it At this point, we went on a nice little week and a half run up before finally pulling back. When we did pull back, surprise, surprise, look what level we bounced off before heading back up again on our run, the $88 level. However, as I've been pointing out also, looking at this high in conjunction with this high, we are now making lower highs. And also, you look at the big bad boy, the 200-day simple moving average, and it is still sloping downward. So let me pull up a longer term chart. You can see that despite the rally we've been in here for the past couple months, the overall trend measured by the 200-day is still clearly sloping downward. So moral of that story is we still have work to do. Now jumping out to the weekly chart, you can see that once again, actually I'll get rid of this yellow line. Remember that was 88. We have the 50 period moving average coming down, and it's basically going straight down right on top of us. So there's still work to be done. I mean, this has been a real nice move, but we still do have some pretty thick overhead resistances above us, so we'll need to keep our eyes on those. But just to go back to the daily chart again, the key level that everybody should be watching, and that's going to really play a crucial level, is right here at this $88 level. If we can't hold this, then I think we'll for sure come down and give the 50 period moving average a test. And if that can't hold, then that's when people might want to be talking about reversal. Right now, I'm not comfortable saying that we're having a complete full-on reversal just because this high didn't go above this one. However, this lowering of highs does suggest that the rally might be running out of a bit of steam here, but we have held this 88 level, so that's the big but right now. And as long as we can continue to hold that, then no reversals should really be talked about right now. So once again, this was a SPY, which mimics the S&P 500. Thanks for listening.